Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me today is the team from Music Royalties, a private company. The team consisting of both Tim Gallagher and Connor Gallagher, CEO and head of investor relations, respectively. And Music Royalties will be presenting at our upcoming investor conference, the Planet MicroCap Showcase, taking place in Las Vegas, April 30 through May 2nd, 2024, at the Paris Hotel and Casino. For more information, to meet the team from Music Royalties, one-on-one presentation, register to attend at planetmicrocapshowcase.com. With that, gentlemen, thank you for joining me today. How you doing?
Very well. Thanks for having us.
Thanks for having us.
Awesome. It's great to have you both here. So, this is our first time doing an interview together covering Music Royalties. So, Tim, I'm going to come to you first. Can you give us that quick overview and history of the company?
Absolutely. So we morphed from the public gold royalties world, which you're probably familiar with. There's lots of companies in that turf, and basically it was very successful. And going back to the fall of 2017, saw the music royalties category in the form of BMI pays out a record $1 billion in royalties, which is broadcast music in the US, redistributing the cash flow from songs and other categories. So that was the start line. And since then, 2018 on, we started buying catalogs, raising money from investors. And over the last 6 years, we bought 28 catalogs and about $30 million. We paid out $8 million in dividends. And the whole idea is to replicate the gold royalty model, the very successful public version, and get to the point where we can take music royalties public. Because, of course, this is an asset class that makes a lot of sense. The business model is really 100% margin. But in the music business, with technology, it's reinvented the space. And the genius of it is that it's protected by copyright law, which sounds funny, but it's a life of author plus 70 years. So if you take, the remaining life of an author, it means that we're talking 100-year mine life by comparison to the gold thing. So it's just a growing space. Nobody owns it, but everybody knows the hit content. And we're just trying to bring that to investors because there's no public music royalty company.
Very good. So, Connor, coming to you on this question, I mean, what would you say makes what you guys are trying to do here unique and different compared to some of your peers out there that might also see some similar things like, oh, I want to be in the music royalty space? But what about how you guys are building out the company that's unique and different?
Yeah, so in terms of, I guess, the competitors that are so-called competitors that are out there, primarily investment funds. And within the investment fund structure, it's the management fee structure. So whereas with music royalties in the company structure, we have no management fees. In addition, we also have no debt. It's all one class of share. And our incentive as large shareholders is to make accretive acquisitions so we can grow the dividend by double digits year over year. So in the case of a fund, it's primarily yield based is why people are making their investment. Where with Music Royalties Inc, we're both growth and income. And since we've started, we've been able to increase the dividend almost by 400%.
Very good. So, Connor, coming right back to you on this one, love to learn a little bit more about both yours and Tim's background, the team behind Music Royalties.
Yeah. So as Tim said earlier, we both came from the mining royalty space, and that's where we were relearning the success of Franco-Nevada, going from a 2.5 million market cap to I think 30 billion today. Just by acquiring royalties on gold and silver mines. Because for the most part, the mining business is a very capital intensive, tough business with employees and permits. It's very linear. So there's a lot of risk. Whereas, with royalties, it's almost no risk with 100% margin. There's no costs. You're just at some point when the mine goes into production, all you need to do is sit back and collect your 2% off the top line. and there's a lot of analogies with that to the music business, because it's really hard to create the next Justin Bieber or Taylor Swift, and the hit song associated with those brands. But once you have it, all you have to do is sit back and collect, and they are definitely growing because of smartphone adoption and streaming and subscriber growth to those FANG stocks.
So my final question then for you here today, from what you can tell us, I'll throw it to either you or Tim. What would you say are some of the company's goals that you'd like to see achieved in 2024? Tim, you want to hit that one?
Sure. I mean, at the end of the day, the growth is dictated by raising more capital to buy more songs and content, TV, film, royalties, and so on. So it's really get the story out there, get more capital in, and extend the portfolio, which is about 28 catalogs now, 7,000 songs, and that's drives the increase in the dividend. So you get the sort of the perfect mix, if you will, of a monthly dividend payment that's growing at a double-digit rate with the corresponding capital gain. But if we can achieve the gold public peer yield, they trade at 1% dividend yield, which sounds astounding, but when you think about it in simple terms, getting to 10 million in cash flow as our goal and trading at 1% means we've got $1 billion market cap. So that's the plan.
Well, very good. Well, with that, where can our audience go and find more information on music royalties? Connor?
Yeah, you can go to our website, musicroyaltiesinc.com. We also are on all the social platforms, Instagram, Facebook, YouTube. We've got a bunch of YouTube videos that help learn and understand, how royalties are collected and paid. But yeah, go to musicroyaltiesinc.com.
Very good. All right. Well, guys, with that, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I'll see you both in Vegas.
Sounds great.
Thank
Bye
you,
for
guys.
now.